So joining me now to discuss what could lie ahead is Sean O'Hara. He's the president of Pacer ETFs. Sean, great to have you on the show this morning, and a little bit of reprieve these past two sessions for equities. What do our viewers need to know?
Well, good morning. Thanks for having me. I think, we have a couple of competing narratives going on. We have a market that seemingly the earnings have been pretty good on, although valuations are still somewhat elevated. And then you have this concern about, looking forward and what the Fed policy is going to be. And, we're sort of in the same spot that we were last year at this time, which is we're hoping for more action from the Fed than maybe we might get. That wasn't a bad thing last year. We seemed to do just fine. Instead of getting 7 cuts, we got 2, I think. And so, but I think there's a lot of nervousness out there around what's going on with the Fed. And then I think the elephant in the room is what's going to happen legislatively, particularly as it relates to the President Trump's tax cuts getting extended or extended permanently.
How closely are you watching trade policy as it plays out with that deadline of tomorrow, with those double-digit tariffs expected to be enacted, at least announced to be enacted, of course, on Canada and Mexico?
Yeah, I think there's too much nervousness around that personally. We've seen this story before. President Trump has been president before. He hasn't changed his tune in terms of how he looks at tariffs. I think he uses them as a bargaining chip or as a way to maybe motivate some of our partners to act a little bit more with a little more reciprocity in terms of how trade goes. And so I think there's a part of the market and those market participants that think it's going to be damaging and inflationary. And then there are those, and this is the camp that I'm in, where I think it was benign last time, and I think it's going to be benign this time, because I think ultimately we'll get to where we want to get to with our trade partners.
What does it mean that we see cryptocurrencies, namely Bitcoin and other risky assets like Tesla, for instance, right? It has been a volatile stock, rising today on the back of the announcement that President Trump is planning a strategic Bitcoin reserve.
Well, that's a very simple thing. If the president said they were going to go out and buy a whole bunch of gold, you'd see gold prices go up as well, because there's sort of a finite supply. And so if the demand goes up, obviously in a commodity world, the price goes up. I think with the announcement on crypto from the president, I think that for those people who are fans of crypto, and particularly the bigger names like Ethereum or Bitcoin, having the United States, set up a reserve, which means they're going to be buyers of those assets or those tokens. I think that's good news in the short run for the crypto space.
Mm-hmm. Let's talk more about the jobs front, because we will get that all-important jobs report on Friday, the first Friday of every month. This will cover the month of February. We've seen a lot of federal worker firings and departures in this new year since the new administration took hold. What are you expecting that jobs report to show?
I think it's going to show exactly what you said, and that is that for government jobs, I think you're going to see a decrease. What we really want is we want a healthier job market here. We want, we went through a couple of years of where all of the job growth was federal employees, and that's not a healthy place for us to be in the job market. Even though the the unemployment rate was low, that's hiring people that essentially take money out of the system through our taxes and then run it through a bureaucratic agency. Some of the money disappears, and then they wind up paying it to the employees, and they go out and spend it. I think a much healthier job market would be one where we're creating private sector jobs. And so I would be looking for that as the big catalyst going forward.
What are you expecting on the inflation front? We don't necessarily have any inflation data this week per se, but we will get hourly wages as part of that jobs report, and that, of course, does factor in to the inflation picture.
Inflation, I think, most of us probably would like to see it coming down faster, but it just doesn't work like that, right? The president's been president now for like 2 months, and so we need to see some time to see whether or not his policies are going to have the effect on inflation that we want. I would expect that it'll remain somewhat stubborn, if you will. I don't think we're going to get down to that 2% target that the Fed says they want to get to. I still think we're going to probably hover in that 3%-ish range for a little while until we can start to see some real legislative change.
Sean O'Hara, president of Pacer ETFs, thank you so much for joining, of course, as this market opens for the first day of trade in March. We appreciate it.
Take care.